Hooty hoo, all my stock market gamblers. Welcome today. We got Thursday. Tomorrow's the last trading day of the year. We're winding down the year. What's happening? Markets are once again up. We're kind of in this short squeeze. We're hitting record highs on the Dow Jones. We're hitting record highs on the S&P. Haven't hit the record high on the NASDAQ yet, but that could follow today. Could happen today. But what's really going on? Well, the volume. So the market's going up, right? But the volume is just going down. I mean, this is going up on pathetic volume. This is what's called the short squeeze. You got a lot of big players coming into the market, pushing the market around when nobody's there to stop them. I mean, everybody's on vacation, so if you got buyers and nobody's selling, what happens? The market goes up. Now, here's what I want to talk a little bit about, how this works. Okay, so right now you got the S&P 500 at a record high, right? But here's what's interesting. You have more 52-week lows in the S&P 500 than you have 52-week highs. Very interesting. When this happens, it usually means a major correction's coming. And I believe that correction will come in January. I believe that there's what's known as a January effect. How January goes, the rest of the year goes. If January's down, the rest of the year's going to be down. January's up, the rest of the year's going to be up. Now, I do think the market is going to collapse in 2022. So I am actually expecting that January is a down month. We'll see what happens with that. But when you got this, you have basically no buyers in the market. Well, no sellers in the market right now. Someone's buying these, but they're not buying the whole market. The market breadth, they're not buying. They're buying the top 5 stocks. Now, who would be buying the top 5 stocks to prop up the market? Well, we all know the Federal Reserve is not allowed to buy stocks, right? So it couldn't possibly be them. Could it? Well, they do have a trading desk. Let me think. Yeah, they have a trading desk. Now, if they wanted the market to go up, well, when you have a trading desk, it's really hard to buy all the stocks. Now, they can buy ETFs and stuff like that make the market go up. But what if they just went out and bought the 5 top stocks? The 5 top stocks, would that make the market go up? Yeah, what if they bought 1 million shares of, let's call it Facebook, Apple, Amazon, Netflix, Google? What if they just bought, 1 million shares of each of those? Could that influence the market to go up? Yes, it could. So somebody is causing this short squeeze. I don't know who it is, but I have a hunch that the Federal Reserve is behind it somehow. Now, maybe they're just giving money to the hedge funds and the hedge funds are bidding it up. Very possible, but we'll see what happens when January comes, when the players come back to the market, when the big boys come back. I think they're going to gang up on the short side. I really do. I think they're going to push this market down in January. Right now, we're breaking out, and everybody, you listen to mainstream media and a lot of people on YouTube, they're all excited because we have this breakout. We have a breakout to the upside. We're hitting new record highs. But we're breaking out on just volume that is pathetic, and that's usually a false breakout. It's it's a fake out. It's a fake out. They go, look, the market's going up, and the retail guy comes in and goes, I don't want to miss out. You get the fear of missing out, and they jump in, right? So they push the market up higher. But when the big boys come back from vacation next week, I'm telling you, they're going to look at this and they're going to go, no. We're going to push this down. We're going to push it back down. Look, you have a lot of things contributing to the market going up right here. Okay, let's talk about margin debt. That's up 42% year over year. 42% year over year. But now, so a lot of people are in the market. A lot of people are gambling. They're gambling with money they don't have. It's called debt. Okay, but you got somebody pushing up the top 5 stocks. Now, the NASDAQ, for example, NASDAQ's up, about 18% for the year. If you took out the top 5 stocks of the NASDAQ 100, The NASDAQ would actually be down about 22%. You see, not all stocks are going up. Most of them are just getting beat up, and they're getting beat up pretty hard. But, there's two sides to everything. Now, that's how you create a market. If everybody was a seller or everyone was a buyer, there'd be no market, right? So you have to have this tug of war between the bulls and the bears. And that's what we're getting right now. And right now, the bulls are winning. We got this short squeeze going on. Now, the S&P, you look at the PE ratios to see if it's overvalued or not. The S&P, the average PE is up over 30 to 1 right now. Now, normal is about 15 to 1. So it's twice the size of normal. If the market collapsed 50%, it comes back to about normal. The Buffett indicator, where he takes the GDP to the market cap of the whole market, it's running about 220%. Now, he says the market's cheap if it's below 100%. Well, the market would have to come down about 60% just to get the market to a place where it would be a cheap market. Right now, the market's very expensive. We all know that. We know the crash is coming. Now, the big $1 trillion question is, when is the crash coming? Now, to be clear, in January, I think we're going to have this pullback, and I think it's going to be about 10, 15, could even be as deep as 20%. There's going to be this pullback, but that's the buying opportunity. I don't think the market's done just yet. I don't think it's going to get done until the September months, when they actually start to maybe raise interest rates. Now, they say they're going to raise them 3 times. I don't think so. I would bet the under on that. I don't think they're going to raise them 3 times in 2022. Maybe once, maybe twice, once they see that market starting to crash, once they see the housing prices starting to crash, they're going to say, we cannot raise them. Matter of fact, we got to lower them back down again to 0. They got to keep it at 0 if they want this Ponzi scheme to continue. And that's really what we got going in the market, is a Ponzi scheme. And the S&P, we're up about 30% this year. Once again, you take out just 6 stocks from the S&P 500, that return goes down to only about 10%. Look, at this market is very top heavy. It's kind of like, well, in the United States, it's like, the top 10% of the people that control the wealth, they own more wealth than the bottom 50%. And that's true with the markets too. You got these top stocks. I mean, okay, if you took the top, God, what is it? Top like 10 stocks in the market of the S&P 500. They're responsible. They have a greater market cap than the bottom 250 stocks. It's very top heavy, very concentrated. In other words, there's no breadth in the market. And well, that's what's causing the squeeze upward. These top five or 6 stocks are holding the market up, where you got these 250 stocks pulling the market down. Now, you get a lot of two sides. A lot of people tell you, Mike, you're crazy. It's different this time. They're just going to prop up the market forever, and they're going to prop it up as long as they can. They're going to do it until they can't. But you have the two sides again. Now, a lot of people, like, for example, the economy. Is the economy good, or is the economy bad? You listen to mainstream media, best economy we've ever had in 50 years. Really? Well, what do we make anymore? We don't make anything. We don't have, our trade deficit is exploding higher, because what we do is we make dollars. That's what we make in the U.S. We ship those dollars out, and they ship us products. Okay, so is the economy good? Is it good? Well, half the people say it's great, best in 50 years. The other half the people that are feeling the pain, they saying it's a terrible economy, probably the worst in about 50 years. It's funny how it's polarized. The whole country's polarized. We're polarized, the Democrats, the Republicans, the vaxxers, the non-vaxxers. The economy, is it good? Is it bad? We like to argue. We like to decide which side of the fence we're on. Now, I'm on the side of the fence. I don't think the economy's doing that well. I think the economy is getting destroyed by inflation. I think inflation, the economy is getting destroyed just by being the economy, but inflation is actually destroying the United States. And I think the United States is going to have a lot of pain coming. Now, if you look at countries like Turkey, their inflation rate running right now about 30%. They are suffering. Now, the U.S., the real inflation rate, I believe, is about 15%, about half of what Turkey is, and people are starting to suffer. But who's suffering? Is it the rich people? No, it's not the rich people. It's the poor people. It's the people that don't have assets. The ones that don't have assets that have to work for a living, and they have to go out and they have to buy food for their families. They have to put gas in the car to get to work. These people are starting to feel the pain. They're starting to suffer, and we'll see how that plays out. So you got the debate. Is the economy good? Is the economy bad? Is the market going up? Is it going down? Republicans and Democrats, they like to fight. Yeah. Vaxxers and non-vaxxers, everybody's blaming everybody for the whole pandemic. We are in a divided country right now. But anyways, back to the stock market. I digress. I got carried away there. Stock market is in this short squeeze. We are headed up, up today again. And the short squeeze on very light volume. So wait, I'm getting ready for the January effect. And I mean, the first trading week, I actually think we'll see the sellers come back into the market and pull the market down. We'll see if I'm right. Maybe your opinion is that we're just going to continue to go up. Maybe your opinion is they're going to just keep printing money and prop the market up all of 2022. Could be right. I don't think it's going to work, though. I think they're going to try. I just don't believe it's going to work. I think we're going to get a pullback in January, and I think we got a crash coming in summertime. Now, something could happen sooner. Could there be a January crash? Absolutely. But I think the crash is going to wait till summertime. But I do think we're going to get that correction. I'm confident of that. 10, 15%, and that's probably the buying opportunity that takes us to the new high. Its topping process takes time. You top out, you come down, you top out again, called the double top. Then you maybe even get a triple top. But the big crash is coming. It's coming. It's just around the corner. I'm Tall Mike. Hey, everybody, have a great New Year's, and we'll talk again in the new year. See what's going on. Bye-bye now.